Comments made on the following paid commercial program are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time.
Welcome to the Money and Wealth Show. On the program this week, tax tips with David Ingram, money commercials, and our special guest, Victor Adair. Welcome to the Money and Wealth Show. I'm Sterling Fox, and our special guest today, longtime broker and portfolio manager, Victor Adair. Victor, good to have you with us.
Good to be here, Sterling.
You and I haven't had a conversation for a few years, and times have certainly changed since our last chat. It was more of a robust time, as I recall, at the tail end of the boom.
Yeah, the boom was running. That was probably about 07, I think we talked.
That's about right, yeah.
Markets had a pretty nasty correction in 08. We've got a good rebound in 09, and here we are in 2010, and I guess we're going to talk about where we go now.
Well, exactly, and I think a lot of where we go depends a great deal on confidence in the marketplace, both at the consumer and the investor level.
Sure.
How do you see the landscape these days?
Well, certainly more confident than it was. I mean, we got into a real crisis of confidence in the fall of 08, certainly into the spring of 09. The S&P traded down to the lowest level we've seen in 12 years. And I think during that period of time, people were really concerned, what we call counterparty risk. You know, if you were going to lend some money to somebody, you know, were you going to get it back? So I don't want to rehash all of what's been rehashed, but it was a real crisis of confidence. It's been repaired to some degree as we've had this rally back from the lows of March of last year. But I think we've still got some hurdles or bumps ahead of us, no question.
Well, then how do you square the circle when you take a look at, from perhaps your perspective, returning confidence, cautiously returning to previous levels of confidence, stack that up against housing prices in places like Victoria and Vancouver and Toronto, which are still in the stratosphere. And people in that area, especially those looking to sell right now, are going, crisis of confidence? Come on, you must be kidding.
Fair question. I mean, I think I'm more looking at the global market, in particular the American market, rather than the regional real estate markets here in Canada. I mean, it certainly puzzles me that real estate markets here are as strong as they are, but as a trader, I got to go with that's how it is. Real estate prices, obviously, in Miami or Las Vegas and markets like that are down a lot from what they were. Mm-hmm. You know, during the boom, it was almost like there was no such thing as risk. You know, people were going out and buying a dozen condos at a time, leveraging them up, and just assuming they were going to get rich. And then, of course, when that bubble got popped, there were some real horror stories. So I think we're not anywhere near back to that level of overconfidence that we had at that time. And the confidence has been coming back in the markets. Again, the markets that I'm looking at, the American markets, the global markets. Certainly, we've seen a lot of debt that's been taken on. And nobody is going to lend somebody else some money unless they have some confidence that they're going to get that back. And I think that's maybe going to be the puzzle, you know, as we go ahead. Obviously, during that time of overconfidence, there was a lot of money borrowed in the private sector. People were running up credit card bills, they were taking on mortgages and so on. Lately, we've had the governments run up a lot of debt. And we're seeing some governments around the world that are being disciplined by the markets because the markets don't think that they're going to be able to repay the debt. So this thing about the debt, that's money that's been borrowed, and whether or not it's going to get repaid, I think is going to be with us for some time and will act as a dampener on that enthusiasm.
Do you see a direct correlation between consumer confidence and investor confidence, or are we talking two separate items?
No, I think they're definitely interrelated. Investors are going to try to guess what the consumers are doing. The consumer would be maybe a leading indicator. We have seen, here's an old saying, you can never make any money by betting against the American consumer. You know, it seemed like for 50 years, you know, he was in over his head, but it just didn't work out to bet against him until 2008. Consumer confidence is coming back, but we're getting a switch here. And part of that switch is the demographics, as we all get a little older. And people, I think, are going to be more inclined now to want to try to save a little money and try to spend a little less. So that, again, is dampening down that enthusiasm to go out and take on more than you could afford.
You spent a fair bit of time in the States. You're just back from winter in California on the golf course in Palm Springs, you lucky devil. How would you compare U.S. confidence levels versus those up here in the Great White North?
Well, Canada's on a roll, no question about that. There's more confidence here that the economic numbers do look better. It's reflected in the currency. The Canadian dollar is done well this year, a lot better than it was, say, just 12 months ago. So that's probably a good expression of the confidence. Real estate prices are much stronger here. The perceptions are our banks are in better shape. So yeah, just across the board, higher confidence in Canada than in the States.
Okay, and that you've opened the door ever so nicely to the whole matter of the Canadian dollar, which is, according to senior economists at all the big banks, going to surpass parity with the greenback over the summer, perhaps taper off a little towards the end of 2010, Victor, but it's pretty darn healthy relative to the U.S. dollar. Is it because the U.S. dollar is so shaky, or does the euro come into play in all of this as well?
All of the currencies will trade one against the other. The Canadian dollar recently hit a 25-year high against the British pound. It's at about a 4-year high against the euro. Part of what happens in the currency market is capital leaves one place and goes to another. So the capital markets perceived problems in the UK, perceived benefits in Canada, and money rushed quickly from the UK into Canada. I am a little bit skeptical, and I always am, when I see a lot of people thinking the same way. And I know there's been a strong call for the Canadian dollar to go a lot higher. But I was looking at my charts the other day, and if you go back, I don't know, 35, 40 years, that sort of thing, we've only had 3 months during that entire time when the Canadian dollar has stayed above 98 cents. Yeah, it's different now, but if you're looking at maybe making some investments in the United States, a 98-cent Canadian dollar has got to look awfully attractive.
Indeed it does. Our guest on the Money and Wealth Show this week, longtime broker and portfolio manager and well-known British Columbia financial commentator, Victor Adair. Lots more to come. Stay with us.
Good afternoon. My name is Larry Ray. I'm the president and CEO of American Manganese, Inc. I'm here to tell you today that American Manganese could possibly bring in the lowest cost electrolytic manganese metal mine in North America. It'll be the first one in the past few decades. What is manganese? Well, you can't have a steel industry without manganese. If you don't have manganese, you don't have steel. If you don't have steel, the world stops. North America has no manganese. We depend on our neighbors and other countries to import our manganese, and it just doesn't make any sense we don't exploit the resources in our own country. So I'm here to tell you that we are moving ahead with the feasibility study, we're moving ahead with the environmental studies, and we're moving ahead with a massive drill program in order to build the American Manganese, Inc. into the first primary electrolytic manganese producer in the United States. Please visit our website at americanmanganeseinc.com or call us at 604-531-9639. Thank you.